Sunshine, she's here, you can take a break. I'm a hot air balloon that could go to space. With the air, like I don't care, baby, by the way. Because I'm happy. Clap along if you feel like a room without a roof. Because I'm happy. Clap along if you feel like happiness is.
Good morning, good afternoon, good evening, wherever you're joining us from, and thank you for joining us tonight as we do our second WealthE Wednesday session. With me tonight, I have Scott Picken, CEO of Wealth Migrate, and James Painter, founder of Dynamics Forex Solution. We look forward to sharing with you tonight on the 3 successes and reasons why you should have the right information at the right time and why that is so important, particularly around Forex. Before we start, we have had over 500 people who have registered for this webinar, and we are having people coming into the room all the time. But I would like to start by asking everyone just to pop into the chat box or the Q&A box where you are joining us from. It's always nice to see where our community is coming from as a global community. And as always, I will be in the background, making sure that our panelists are aware of your comments and your questions. So please do say hi. Please do let me have your comments and questions. And there will be time at the end when we open the floor to Q&A to both Scott and James to answer those questions. So without further ado, I'm going to hand over to Scott. Welcome, guys. Thank you for joining us tonight.
Awesome. Thank you very much, Lee, for having us online. So I just wanted to share quickly, and tonight's all about James, and I definitely don't want to steal his thunder. But what I wanted to just share to start off with is, we're living in some fascinating times, and things are changing, faster and faster. Last month, we spoke about how the tale of Reddit, GameStop, and Robinhood, which was really the talk of January. The talk of February was Elon Musk and Tesla going and investing, funny enough, on my birthday, going and investing 1.5 billion into Bitcoin, and what they were doing and why they were doing it, and obviously Bitcoin going crazy through the roof. Now, I don't want to steal James's thunder, but I remember a webinar very explicitly, and it's recorded somewhere, whether it was a year ago or 2 years ago, I can't remember, but I can go and find it, where James, at the time, Bitcoin was sitting at between $3,000 to $7,000 a Bitcoin. And I specifically remember him saying it would get to 43, and then from there it would test 50, and then from there it would sort of retrace back again. And I remember sitting there at the time thinking, even when it got to 20 and then it sort of caved back to 3, and thinking, yes, 50 is a hell of a long way away. Well, in the last month, we've seen it go over 50, and we've seen it retrace by over 25% just on that. And I think my point of what I'm trying to get at is that, in the last 2 months, technically on paper, Elon Musk has made more money out of Bitcoin than he's made out of Tesla, which he's been investing in for 20 years and building as a company. And again, we live in very, very strange times. And as Roger Hamilton rightly says, there's plenty of knowledge out there. Any of us can find knowledge on the internet, but there's very little direction. And so someone like James comes along and actually provides us with that direction that we're looking for. We've spoken a lot about Wealth 5.0 and where the world is going, and how people, it's about the impact they're having. It's about the creativity they're having. It's about the high touch. How much are you adding value to other people? It's about using technology, and ultimately it's about future-proofing and digital. Now, tonight actually is about point 5, because if you know where you want to be, and you know what your sort of future lifestyle is, and you know what your passive income that you want to create, then in terms of your investment strategy, you need to know what is happening with global currencies, because it has a large impact. So it's not only problem solving, but it's also future proofing. And again, you can guess, you can go talk to your banker, you can read the newspaper or the news, or you can actually listen to someone who's done it for a very long time. Why is this important? Well, at lunchtime today, we actually ran through with our team one of our latest deals, which we've launched, which is our McFarlane opportunistic deal, which is in America in the aged care sector. I know literally yesterday we closed on a structured note, which has been highly taken up by our team from Cashbox. So there's constantly good deals coming now that are in different sectors, different types of asset classes, different currencies, and even different countries, which is why it becomes so important when one looks at it to be able to manage it all in one place. So we've now got the digital wallets. No matter where you invest in the world, it's all going into one place. We've also got the human touch. You can go out and actually talk to one of our team members, be it Fritz, be it Alex, Lee, myself, or someone else, and actually understand. But really for me tonight, when you look at 2021 and Wealth 5.0, we actually wrote a book. And when I use the word we, I use James in this, because in 2014, when Clem Santa said that he would endorse me writing a book based on the models and everything, one of the key factors when you're modeling investments is currency. And I'd met James and we'd worked together. Now it's been 12 years. So it was probably sort of early 2009 that I first came across James. And having helped thousands of people invest in international property, I kept getting asked what was happening with currency. And quite frankly, I had no idea. I knew probably less than most of you. And the only thing I do know when it comes to currency is if I'm buying, you should be selling, and if someone's selling, you should be buying, basically, because I tend to get it wrong. But what's fascinated me over the years, and this book is out of date now, it's 6 years old. But if you want to read one chapter that hasn't changed, go and read James's chapter on chapter 2, because it's all around the fundamentals and how the fundamentals don't change. And I think one of the most important principles of business is that times change. Elon Musk puts $1.5 billion into Bitcoin and it feels like the world's changed, but the fundamentals of business don't change. And so without further ado, I wanted to hand to James, because what's really important about tonight, and Lee, just before we do hand to James, I'd love to bring up that survey, because we've got this age-old problem. And James and yourself and I were talking about it just before we got started, because some people have been on the journey like myself for 10 years plus, and they know how James operates. They know how him and his son and the team actually do the forecast. They know and have had experience like I have, where even when I thought James and them were going to be wrong, and then with time, I can't believe the accuracy of how it actually came out. And then on the other side of the fence, you've got people that have never heard of James and his team before and have no idea how it works. And without having some sort of understanding of how it works, they've got no belief in the actuals in terms of where we're at. So if you wouldn't mind just voting, because it would be fascinating for us to see whether you've actually seen James live and understand how it actually works, or this is brand new and you really are getting context. And while this survey is up, I can see that we've got 66% of people have voted, so we'll give it another 30 seconds. I would say that one of the things James, Lee, and myself have been talking about is that we probably want to create like an evergreen type product where someone can go in and understand how they do it and what is their methodology, etc. We're going to create that. And then equally, we want to have a product where someone like myself wants to be able to tap into James, wants to be able to know what's going on, and be able to make intelligent decisions. And you actually need a bit of both. So James, I think you'll be very glad to know that on the poll, we have an outright winner of 50-50.
Okay. Well, that's just what we're talking about.
So it's a balance.
Yeah.
It's a balancing act. And I think for tonight, it's a balancing act. So for those of you that have been online and seen James before, bear with us, although he does promise even for Lee and I to have some new material to keep us engaged. And then for those of you that haven't seen James, obviously understanding how the car works, before you get in and drive it is pretty critical. But I will say one last thing, and then I'll hand to you, James. Having done this for so many years, your predictions and your accuracy continue to blow me away. And it's why we're so honored to have you online tonight to share with the community so they too can make smart investing decisions. I know this is not financial advice. I know you're going to give the disclaimer, but it's really important for people to have a system that's better than guesswork. Over to you.
Well, thanks very much, Scott. It's my privilege to be here tonight, and to have you all on board. Hoping to share lots with you. So I think the best is we can just get started here, sharing my screen. Are we up?
Yep, we've got it.
Okay. So tonight, what we're going to be sharing with you is 3 secrets I've learned in relation to making my own successful investment and exchange decisions. I need these on. Which will help you protect and grow your wealth with greater clarity and confidence, less time, stress, and effort. So that's what I'm hoping to share with you tonight. Yes, we do have a disclaimer. It's is for information and education purposes only, and shouldn't be taken as advice. So just all the legalese there. We're sharing information, but information that can help you. So some of you have seen this before, some haven't, but is this you when you're involved in the markets? Are you convinced that the market is always working against you? That there's someone looking over your shoulder waiting for you to exchange just at the wrong time? I know how often I felt like that. And then just when you moved, done it, as Scott, you were saying, then the market moves the other way. And leaving us feeling like this poor dude, yeah, depressed and confused. So if perhaps you'd like to just, and is there a chat box there, Lee, or not really? We're just speaking here.
Yes, we've got the chat box.
Yeah, I'm just interested how many of you actually feel like this with your investment and exchange decisions. Because my promise to you tonight is once you see what I show you, you understand that there's an underlying reason for your lack of consistent success, and discover exactly what you need to identify and to time successful investment opportunities with clarity and confidence and less stress and effort. And if you stay till the end, you have a free gift. So let's just start with why you should listen. Fact of the matter, I've been where all of you are before, and I know what it feels like. It sucks when you just don't know what's going on and where to get the right information, when to take the right action. And I know what a transformation that these secrets have made for me and for thousands of clients all over the world. And I know that you'll have that same transformation once I've shared these with you. So I just wanted to give you a sense of what it can be like by the end of this webinar. That instead of feeling confused, frustrated, angry, and so on, stressed with what the market is doing, you can feel empowered and have clarity and confidence to make strategic decisions with less time, stress, and effort. And instead of floundering around sea of unknowns, they're like this poor chap sleeping, not sleeping at night and getting it wrong. We want to give you the time and energy to focus on what's important for you. So whether your business, family, and so on, that's our objective. So just the normal, please, if you can have your full attention, because you're going to make it worthwhile. Whether you a newbie, entrepreneur, business owner, exporter, importer, investor, but if you're wanting to get better results and overcome what's been holding you back, then please pay attention. So perhaps just a bit of background. Some of you know me, but some of you don't. So I have an engineering background, been in offshore investment management for 25 years. I've had a full PhD in the School of Hard Knocks, been training for an exchange and doing technical analysis since 1994, and handling tens of millions of dollars for in foreign exchange. And then I've been forecasting the market since 2005. I'm using my own brand of dynamic pattern matching techniques to help clients. And then in relation to my involvement with Scott, as he said, I've written his chapter on currencies. I've been an expert speaker at his events, including Wealth Movement in 2015, along with others, other experts. And as some of you might know, I'm the currency expert contributor to the Inner Circle. We were there from the start as a contributor. So just to give you some context, my own painful story, got involved in offshore investment management back in 1993, the first offshore investment that was available. And we had to get Reserve Bank approval, SARS approval, and so on for it. And what it was based on was a depreciating rand. That was one of its pillars, was that the rand would depreciate over time. And that was just based on fundamentals that the rand needs to depreciate to remain competitive, 5-6% per annum. And we had these aberrations along the way, but as you can see, from 93 to 2000, and so that all went according to plan. And then 2001, just something different happened, and we saw this. It had taken us, what, 7-8 years to get from $3 to $8, and it took us 1 year, less than 1 year, to taking us right to here, 1380, near the end of the year. And firstly, this just blew us away in terms of, our idea that, the market, you can just extrapolate the past forward. No, something strange happened here, and we had this huge spike up. And at this point, we had both funds that we had to convert, and we had shipping costs for our tank containers, and for the orders that were coming in for 2002. And we sat there and we said, what do we do now? Everyone's saying the rand's going to 20, 25. We'd look like idiots if we exchange those funds here, those dollars. But let's lock in our shipping costs, because we're costed those in at about 12 in terms of what we acquire to clients. And as you can see, within a couple of months, the market had just dropped down to 11, and then to 10, by the end of the year to 9. And we held out on those contracts, the forward exchange contracts, and eventually canceled them with a massive loss here at about 8.30. And not only we had these massive losses, but we had clients saying, well, look here, you had quoted us that the rand would depreciate. It hasn't, it's gone the other way, we're canceling. And it just turned the whole business model right on its head. And it also turned our philosophy on the markets right on its head, because, we thought, apart from some aberrations in terms of, the market is a bit random. We thought the market's a bit random, but it will depreciate over time. It just hadn't. We had this huge spike, and then this moved right down back to levels we had last seen 5-6 years ago. And so if you can imagine where we were at that point in time, it's, have we got a business model anymore? But is there any way of knowing where this jolly market's going to go? And that led me on my voyage of discovery, which took a couple of years, as to what actually drives the market, and could we predict where it was going in future. And beginning of 2005, came across some technology which we use in combination with a lot of other or enhanced technology now, which kind of blew my mind away, because it made me realize that markets are not random movements. There's the chaos theory out there, and it's not just a case of simply projecting past into the future on fundamentals, that is not what the markets are. But they're the result of a hidden engine, which often appears irrational. Markets, the movements appear rational, but there's some predictability about them. And so for me, that was the start of where I was in 2005, and what I'm going to be sharing with you now is these three secrets is understanding that hidden engine in the market. So finding out what that hidden engine was. As I said, it creates repeating cycles and patterns and enables you to anticipate future movements and benefit from them. And then also overcoming our Achilles heel, so that we need to understand how we act and react in the markets. And then the third one was getting the right information at the right time to enable us to take advantage of those opportunities with the less time, stress, and effort. So since 2005, I've been forecasting markets, started on the Rand, but covered a lot of markets, just working together with clients one-on-one, whether it's stocks, precious metals, commodities, and so on. And then obviously since then cryptos. But this has helped me manage my own funds, but also assisting thousands of clients on every continent. Down from the individuals just with investments or exchanging, needing to make investment offshore and exchanging their rands, or even make an investment in something offshore. So there's the individual side, and then we've also worked together with large corporates, large exporters, importers, to actually put together strategies for them to manage their risk in terms of when to hedge, when to convert, and so on. So that's what we've been doing since 2005. What our clients say, well, you've heard it from Scott, so we don't need to say too much there, but Scott and I have worked together for, it must have been 12 years ago, and been working together since to assist him in, and yourselves. One of our other clients, Kevin Allen, I feel like a blind man, his eyes have been opened. So that's what we want to share with you tonight. And other in the involved in exports, the business, service industry, that they use us to make informed decisions. So some of these are old testimonials, but some of these clients are still around today. So just let's just give you a context as to where we are, but what we're going to share with you is these three secrets. So to get stuck into the first one, understanding the hidden engine in the markets. There's an underlying engine in all financial markets that creates repeating cycles and patterns. And what this does is enable us to anticipate those future moves and to benefit from them. So we had this picture back here, which showed back in 2005, we're expecting the market to head up to this target area here, 1150 to 19, which looked ridiculous back then. But as we know, that's exactly where it's gone. And just share again what we had there, what they're not random movements or projecting the past into the future, but they are predictable, they're irrational. So some of you have seen this before, but I think it's good to give you an idea of how we see the market. That often most persons see the market as a seesaw, with positive and negative factors. And some of those can be more positive or less positive, bigger factors, smaller factors, and negative, or more positive, bigger or smaller factors. This generally is how the fundamental analyst sees the market. And those factors can be economic, financial, political, social, and actual data, events, and news. Now, I just realized this is all kind of, we base this on a RAND, so you might need to change it for other markets, but just bear with us. But what the fundamental analyst does here, so with the RAND, so, you know, if there's negative news, that's some news that's coming out, and it's more positive, it's going to push the RAND stronger. But if it's actually negative, it's going to push the RAND weaker. It's the same with, you know, any market, whether it's you know, currencies or cryptocurrencies or gold, even property. The same principles apply. But the fact of the matter is that isn't actually what moves the markets. It's not these factors, which we can never know what all of them are. It's impossible. But there is a seesaw, but what is on that seesaw is persons. This is what actually moves the markets. It's not the events themselves, but persons making decisions and taking action. That's what actually moves the markets. So it's these persons looking at the information that they have available to them at any one point in time, and then either taking action, buying, selling, or doing nothing. So if more persons turn positive, take positive action, the market will, whether it's in relation to the RAND will strengthen. And if more persons take negative action, then the market will weaken. So this is what actually moves the market, is these persons, not the events or the economic data itself. And it's important to understand that. But what is interesting is that if we take all these events at any one point in time and filter them through all these persons taking action, what we get is one price. Where we are today at whether it's, say it's on the rand or dollar or, you know, euro, whatever, that sitting at one price to 4 decimal places, which is quite amazing that you take all of this, feed it through this, and you get price. And this is where we start. So what you get as you get changes here, filtering through these persons, we get this pattern that we know so well in the markets. Most persons look at this and say, this is a reflection of this, these fundamentals, these financials, this political situation, the social situation, but it's not actually that. It's a reflection of this filtered through these people. And what we need to realize is 90% of our decisions that we make are emotional. And so these are emotional results, reflection of emotional decisions of all the millions of persons involved in the market. And because we do similar things in similar circumstances, those recur and are therefore predictable. So analogy we've used quite often is that it's similar to weather patterns. If we look at weather patterns, here we can see these patterns recur. We've got 3 hurricanes here, and we can see they're very similar patterns, maybe smaller and larger, but very similar patterns. And they are predictable. Here we can see this is Hurricane Matthew, one of these ones. Where it's expected to make landfall, where it was expected rainfall, the storm surge, everything. Through understanding the laws that govern the weather experts can predict future movements by looking at past patterns. And it's a very similar thing with financial markets, because human nature is predictable. And if no one has read this book here, Predictably Irrational, I'd highly recommend it, because it's quite amusing, but it shows how irrational we can be with our financial decisions, but how predictable we are. And that is because we're governed by the laws of nature. We all tend to react as humans. We tend to do the same thing in similar circumstances, and that behavior recurs repeatedly. And because of that, there's predictability, although it may appear irrational. And how often have we seen that you might get some positive news, and yet the market turns the opposite way, or we get negative news and the market strengthens. So very interesting that we can see the market. Sorry, my screen here is just. Yeah, so it's very interesting that although the markets can seem irrational at a time, yet there's predictability about them, and that is what our business is all about. So just to look at us briefly, how markets move is that we tend to have a trend and a counter trend. And so we can see that here, this is the Rand market. We have a trend, counter trend, trend, counter trend, trend, as the market tends to move in an overall upward trend. So that even if we have, like here, we have fractals in nature, similar thing with markets, we have these smaller fractals making up a larger pattern. And so if you can understand it in the way of like the tides and the waves and the ripples, those are like bigger cycles, and then smaller cycles, smaller waves, and smaller waves on top of that. And we can just see that here, just a picture, this was of the Rand, but how we've got different cycles within larger cycles, within larger trends. And if you think of it in terms of cycles of nature, we've got exactly the same situation. We got yearly cycles of annual cycles. Then we've got seasonal cycles, which can flex a bit. Winter, we've had a bit of a longer winter up here. Sometimes we have shorter ones, but there's winter, summer, autumn, spring. And then we have monthly cycles with the moon, and we have daily cycles, night and day, and we have tides, 4 times a day, thereabouts. And it's very similar in the markets that we get these different cycles that occur within the markets. So just to have a look here at some examples, here we've got the euro on a monthly time frame, and we look at just how that sort of pattern there. Each one of these is a month, these bars, whereas here we've got the euro on a daily pattern. It's not exact, but pretty similar pattern. And then we come to here on the hourly, and we see again a similar pattern, a trend and a counter trend. Isn't that amazing? That if we could go deep, and then we could go down to 5-minute chart and 1-minute chart and be a similar thing. So isn't that incredible that if you understand that these are emotional patterns, that we can have longer cycles of emotional patterns and then shorter time frames of it as well. And then it covers every market. So here we got gold, monthly chart. Here we got the euro daily chart that we had. And here we got crude oil. similar trend, counter trend. So it doesn't matter what market you're in, we're getting the same emotional patterns involved in the market. And then many of you involved in property through Wealth Migrate, well, a similar trend there as well. Trend, counter trend. So, you know, when you see this, it's quite amazing, don't you agree, that when you look at any market, what it is just a reflection of the underlying emotions in that market, those patterns of sentiment. What I just wanted to show you here, that if we let's go back here, if we just have, so we had the tides here, and then the waves, and then the ripples. These are just 3 different cycles, and then a trend, and we combine them. This is what we get. Isn't that amazing? This here compared with that there, and then the market moving down. Isn't that incredible? I asked you what's going to keep this one out, but I think it's pretty amazing, Scott. But it's not just 3 trends. You know, we got a whole lot of cycles moving together, but it's a case of then finding where we are in that cycle and where the market's going to go from there.
What's so important, what's so important with what you're doing here is that the more I study this stuff, the more intelligent people, this is how they're doing it. You know, it reminds me of Ray Dalio and the research I've been doing on him with the long-term trends, the short-term trends, and how they're intersecting. And basically what I'm saying is it's all about pattern recognition. And then after understanding where in the pattern cycle you actually are, because
Correct.
that's going to be such better foresight into where you're going.
Yes, exactly. Yeah, so it's understanding the patterns and then determining where we are within those different cycles. So just so the proof is obviously in the pudding. So just to share some here that we have had, just an example, dollar index May last year, that you're expecting the market to move down and close below, they're confirming even lower. And there's a forecast, we thought, bounce out of that target area. We're expecting to get some support, lifted up and then broke even lower. And that was just understanding where we were in those patterns. Another one, near term of euro, so 2019, we expect the market to test up here and then either drop down for another final push or else move higher. And what it did was test up there, drop to a final push, and then we saw the market reverse. So just to look at this here, there are often 2 possible cycles that are happening. And it's a case of just then determining, you know, what are the parameters to confirm the one and versus the other, what the outlooks are. So here we had the 2, and we can see which one actually eventuated. So having shared that, Scott's and others, things make a bit more sense to you as to how the markets actually work.
No, very much so. Just to repeat, you know, I really got it. You know, I watched this presentation a few times and it really looked like overwhelming, quite frankly. But when you explained it as weather patterns, that's when I got it. You know, as in, I don't have to be a weatherman. I don't have to understand whether the pressure is going up or down, or I'm not even going to try and sound clever when it comes to weather. But I know that, you know, the weatherman can just tell me it's going to be sunny or rainy tomorrow, and that allows me to plan my life. And that's when I got it. You effectively are bringing pattern recognition like the weatherman does, and kind of telling me based on previous patterns what you expect going forward.
Yeah. Yeah. So I mean, we don't know how they do it, but we know that the concept behind it is, and effectively that is what we're using, is exactly the same concept, is using patterns, to past patterns to predict future ones. But then we get on to overcoming Achilles' heel, and you've often spoken, Scott, about where we sat in March 2013 and gave a talk there. And this is one of the images that I showed at that event is, here the market sitting at about 880 odd and expected to move 950 to 1030. To around about 10 we're expecting it to move to. And you said with how much certainty, and I said 90%, because we are very confident of this wave count at that point in time. And from what you said, only 5% took action.
Yeah, well, look, I mean, it was incredible, and I've said it so many times, including a very wealthy property person out of Durban, who everyone knows who I'm talking about, but I'm not going to mention names. And his banker said it was going back to 8 Rand, so he pulled out of the whole deal, and to this day has not invested, but also has never seen 8 Rand to the dollar ever again. Yeah,
so it's just interesting that, because 2 graphs we showed them was this one, and then, which of course we saw then the market moved over the next few months right up to that 10 level. But what we also shared was our longer term outlook, which said the market is going to go up, we'd have some correction, and then we'd head up into this 14 to 21 area, which has also happened. So it wasn't just a short-term forecast, but it was a long one as well. And said, well, then why didn't persons take action? And it's because one thing we can explain is this, is that we were sitting here at this day, but if we look back, what had we seen? We had seen these huge swings, downward corrections. And so all of this was in your mind, or investors' minds, when they're looking at forward, where we've had this and then this, and this had only just partially retraced this. So what stops us going still further if we just extrapolate the fast forward? And that is the problem, is that we've got the recent past and more distant past in our minds, and using that as a filter as to where the market's going to go in future, which is exactly the wrong thing to do. Because
I remind you that that gentleman I spoke of, his banker, it was 880 at the time, and his banker said it would be 8 Rand by Christmas.
Yeah.
We're talking back in, I think it was March, April, May. March. And as we know, within 3 months it went over 10 and never ever has recovered. So it's a classic example of the bankers seeing that red line just continuing down.
Yeah, so bankers and economists and so on don't understand this stuff. So please don't rely on them for advice. I've learned through bitter experience that way myself. But just interesting, I think you've seen this chart, some of you, before, but at this point here, March 2013, this is South Africans' net investment position. So if you can understand who's taken funds out versus bringing funds in, and how that's changing. So here's funds coming in, funds going out, in, out, in, out, in, out. And you can see that at these points where persons were bringing money in was when the Rand was at its strongest. And they're taking it out was when it was at its weakest. Here again, when it is at its weakest, it's exactly the opposite of what we should be doing. And yeah, in 2013, when we were speaking, most persons were bringing more funds in. So everyone that your friend was speaking to, Scott, was probably saying the same thing as the banker. I'm bringing funds in because I see the rand's going to strengthen from here. I'm just taking advantage of, this little push up because I see it heading further down. So isn't that quite interesting? That when we should be taking funds out, we're doing exactly the opposite. And everyone can relate with it, I'm sure. So why do we do these things? Why do we buy when we should be selling and sell when we should be buying? And then do it over and over again. And what we need to understand is our own behavior when we are involved in the market. So we call it the emotional roller coaster. Is that if we are at a low point in a market, we tend to be panicking. The markets drop down to here until we're panicking. We point of despair. And then the market starts moving up and we get to this point here where we're pretty neutral. Yeah, okay, the market's headed here, but I'm still not too sure whether it's going up or down. And then we get to this point at its peak where we've gone from neutral to hope to being greedy to being euphoric. This market can only go one way. And it's at that point that the market turns. And so we start fearing again, and down here, back down to panic. And these are the emotions that we're having as these markets are moving from one extreme to the other, from hope and greed to fear and panic. And if you understand what's happening here is that everyone at this point is negative in relation to that market. And there's no one left to turn the market positive. Whereas once we get here, persons are pretty neutral. So it's not only you, it's everyone else around you. And at this point, everyone has turned positive. But at that point, there's no one else to push the market further because everyone's taken action. And so you can see why that trend reaches an extreme. And then the market drops again, back down to here and back down to there. So understanding this, does it make you realize what is going on inside of you when you're making those decisions? Because your own emotions here are telling you exactly the wrong thing. When the market's at the top, you're saying the market can only go further. When it's at the bottom, you're saying it can only go further down. And so our emotions are tending to tell us which way, exactly the opposite of what we should be doing. And everyone we look at around us is saying exactly the same thing. I'm sure you found that, Scott, at those extremes, that it's very, very difficult to make a decision because you've got your own emotions fighting you and you've got everyone else's opinions around you being contrary to what you should be doing.
Yeah, look, I mean, I found that in the property markets, when in the 20 years I've been investing is when there's the greatest opportunities is when there's mass chaos. But in that time of mass chaos, you're fighting your own emotions and everyone else tells you you're an idiot.
Yes. Yeah, so I mean, Warren Buffett said we need to be fearful when others are greedy and greedy when others are fearful. But it makes decision making very difficult because your emotions are the enemy. So how do we actually overcome our Achilles heel? So first you need to understand that they'll more often than not conflict with how you should be taking action, especially at extremes. And the more people that are feeling the same way as me, the more likely I will be making a wrong decision, not a right one. And when there's virtual consensus as to where market is heading, the trend is exhausted. And we can see this in all sorts of markets. There was a property market back in 2007, the stock markets. Later on, dot-com bubble in 2000 odd. So the bottom line, if you're taking action contrary to your own emotions and those around you, you're probably making the right decision. Well, that's a very difficult one. That makes sense?
Yep.
So what do they need is an objective, forward-looking view that will give you the information you need to make informed and educated decisions, and not subjective gut feel emotional ones. And use the fact that your emotions are contrary to how you should be acting as actually a confirmation signal that the market is at an extreme. I found this very useful for myself. It actually conscious of how you're feeling and saying, well, then the market must be at an extreme, which means I'm making the right decision. And then obviously we need discipline to take action despite how we're feeling at the time. Can you see how that can make a difference, everyone, to making the decision at the right time? It's just understanding how I'm feeling and understanding what the mass sentiment is at any point in time at those extremes will actually help us in making our decision. So just someone that's one of our long-standing clients said, our service has helped make decisions based on fact, which helps bypass the emotional advice offered by many inspiring economists. In short, it's given us a competitive advantage and saved us money. So this is effectively what our service, what you're trying to do is to help you negate that our tendency to make emotional decisions. So that's the second secret. And then the third one is right information and timing. So why having the right information at the right time will enable you to profit handsomely from incredible opportunities with less time, stress, and effort, and say more clarity and confidence. Right information and timing. Where I started off, Scott, was in looking at markets, I started thinking I need to actually know more and more and more and try and search them, more what was moving the markets, speaking to more persons, putting more indicators and all sorts of things, like more and more information. And what you actually found is that, this is before I got involved with this, is that actually more information does not mean better results, because rubbish in is rubbish out. So, and what you found too is, and you've probably found this yourself, is that you get multiple opinions. You speak to your bank manager, and then you speak to your accountant, and then you speak to your friend that's involved in the same market as you, and then you see some research by economists and so on. And all it does is create confusion and indecision. We just freeze. And on information after the fact doesn't help. So that's what you'll often get from the economists is, why markets moved. But that doesn't help you right here and now. And then this is very important, and I think you'll all have had an experience of this, that we can get the long-term trend right, but we can still lose money along the way through just buying and selling at the wrong time. So timing is critical to actually investing successfully, or even investing or hedging. Timing your foreign exchange, it can be quite critical. When it is critical in terms of the timing of it as to whether it will be a successful investment or not. So two key questions to ask is, where's the market going in the long term? Where is it heading over the time frame of my investment? Based on scientific-based objective view, so not just gut feel or anything, on a objective view. And then when is the right time to enter and exit that market within my decision-making window? If you can get those two answers right, you will then be making a successful decision. So just to give a view here in terms, we spoke about those primary trends and intermediate trends and the tides, waves, and ripples. Well, if you look at here, we get the long-term trend and an intermediate trend and a minor trend. And we can see that there are opportune times to be buying within that trend. Here's an opportune time to be buying. At this point, we should be selling. And at this point, buying, selling, buying, buying, selling, and so on. We might get this trend right, but if we're buying here and then selling here, buying here, selling here, we are going to be losing money. And I'm sure many of you have done that. I know I have, by just not getting the timing right. And this is effectively what we do with our service, is help you get that timing right. So this is quite an interesting one here back in, I think we started the service, Scott, around March 2019. Dollar index. I think a lot of people misunderstand the importance of the dollar index, because still, it's, in terms of weighting, it's still huge against all currencies. So when the dollar weakens, all other currencies tend to strengthen. But here we had the long-term trend, where we're expecting the market to rise and then fall sharply back in 2019. And what we saw May last year was the market push up to, just go back here, we expected to top out under 103.82. And we can see it topped out just under 103. And then the market fell sharply lower, as we showed before. And that's where we've seen it since, and expecting it to weaken even further. But of course, we're not moving in straight lines, but at any points along the time, this longer term time frame, we would have had optimum times to buy and sell. And here where I think this January this year, we saw the market bottoming out above here, and since then the market has pushed up back above 90. So we can see here again, this would have given us opportune time to actually, within the long term downtrend, but time to get out of the market, or to actually possibly move funds into dollars for a bit. I know that's what we did. I think we spoke last year, Scott, that the dollar was expected to weaken in 2020.
Yep.
And the euro expected to strengthen. And we actually got out of some of our dollars sort of up here and got back into them down here just through timing.
It's been quite interesting how many people listen to you with regards to that, and actually deep concerns around holistically investing in the dollar, dollar-based assets, because of, and I stand to be corrected here, but I remember from your last predictions it being anywhere, reducing the dollar, decreasing anywhere from 40 to 50% against the euro.
Yeah, so over the long term, but then we might see this year just having some uptick, some correction off that. So important to not only to get the long term, but to get the near term as well. So yeah, we can actually see we're expecting the market to strengthen for the next couple of months at least. And then, you know, one Bitcoin, you were speaking about Bitcoin. This is our forecast we had back in 2019, where Bitcoin was sitting about 3.9. And we were forecasting a move up into this 43 to 66 area before topping out. Since then, we've increased that target area. But yeah, it was to 43. And you can see here our near-term outlook, our service at that point in time was expecting the market to push up strongly over the next couple of months, which it did. See how the market pushed right up here. And then December last year before, we're expecting the market, once it completed this correction, to push up strongly further, which we then saw. So you can see the benefit of not only just having the long term, but having the near term in terms of the actual timing. So instead of buying here or here, we can be buying at an optimum time. And that is what turns out our service that we offer to clients is just to help them in the timing of those investment decisions.
I think also that, James, what's really important to me is, and again, I keep using the weather because we're all used to the weather, is that my son's birthday is on Saturday. So like, it's really important to me to know whether it's going to rain or whether it's going to be sunny, okay? But I can get a report, like I can come on a webinar tonight and you can tell me whether it's going to be rainy or sunny on Saturday. But as an investor, we're in the long-term game. We're not in a finite game where there's no destination, it's a journey. And therefore, you can turn up and James can do this update, and Lee and James, we tend to do this maybe every 6 months type thing, but it's not enough. It's like getting a weather report once every 6 months. It doesn't help you. Whereas being able to actually function and to be able to make the right decisions, and then equally, not just to make it in one sector, but to be able to make it across different currencies and even different classes.
Exactly so. Yeah. So and the weather changes. I mean, you get an app on your weather app on your phone. You use storm radar here, but the prediction might not be exactly as it plays out, but it gives you a good idea of where the market, what the weather's going to do. But I need another one tomorrow, even for the medium-term projection. So it's important to have that ongoing perspective.
Completely. And also, again, whether it's yourself or Ray Dalio or even my uncle, when you're working off data, it allows you to make far better decisions than when you're working off emotion, which I know you've re-emphasized again tonight.
Yes.
It also allows you to go against the crowd because you're working on actual facts and you're looking on pattern recognition versus, an opinion as to whether it's going to go up or down.
Yeah. Yeah, I think, there's looking back is always a difficult one, but I mean, to me, this was quite incredible, even for ourselves, Scott. I mean, it would have been great to get in here at 3.9. I know I just wish we had bought more ourselves at these levels, but and then again, I mean, the market had come back from 14 down to 7. I mean, how good would it have been to buy some Bitcoin down here for the move up? As you say, we've hit over 50 now, which has been incredible.
Yep.
So, right information and timing. I was just speaking about this again, just what we like to get you to from this point of, feeling confused and frustrated and so on, and feeling a victim. That all of you, what we want is to empower you so that you can make decisions calmly, and with confidence, and with actually less time, stress, and effort. And just repeat what we had again, instead of lying awake at night and wondering, what went wrong and what's still going to go wrong, that you can have all of you have the time and energy to focus on what matters to you, and to know that your wealth you are protecting and growing your wealth from a strategic point of view instead of just haphazardly. So those are my 3 secrets that I've shared with you. Have you enjoyed what you all enjoyed what we've shared so far? Has it made sense?
Very much so, James. I think, for me, what's important is that you've shared the 3 secrets, and you've shared the science and the engineering of how it happens. I suppose what I'm fascinated about now is to look at the compass and see where we're going.
Yeah, well, we'll share what we can with you.
By the way, I do listen, because if you remember earlier in this webinar, I said 43, and then you showed it in your own presentation.
Yeah, there's 43. Now, perhaps before we get onto that, Scott, I do have a question for everyone. Is that we've shared quite a lot with you, and I'll give you some insights as to my thoughts going forward. But would you be comfortable with us just putting together, showing you what an offer we have that could help you take things to the next level, so we can do these things for you? I'd like you to know that everyone there is happy for us to do that, because that's we don't want to just give you the some once-off information, but we'd like to hold your hand along the way a bit as well.
We do have the comments coming in on our chat box. Yes, please share. Sure. So I think it's a resounding yes.
Okay, great.
How they can engage with you further.
Okay, good. Thanks, Leah. Can I see the chat, by the way, or is it just you? Maybe.
I'm not 100% sure. I've never been in your seat. I've always been in the driving seat of the webinar. So to be honest, I don't know the answer.
Okay. So, all right. Well, I was trying to see whether I could see them. I thought you were the only ones. I mean, I thought you're the only ones that could, but maybe I can. All right. So what we put together for you guys tonight is our global market forecast package, and it's not just our own package, but we've had a bit of assistance. Scott and his guys coming on board as well to give you something that's really going to provide you with what you need. So our global market forecast package, we cover the dollar, the euro, gold, and Bitcoin on with a medium-term outlook and a near-term outlook. So what can give you the long-term picture and then the near and short-term picture. And for each of those, we update these on a bi-monthly basis, twice a month, giving you that outlook. And if there is, at any point in time, the market is moving, it's broken some sort of levels, we would then update that forecast as well. So what it's all about is providing you with the right information at the right time, helping you to have consistent success, and able to make objective, educated, and unemotional decisions. And as we've said before, what we want is to be able to have more clarity, time, and energy to focus on what really matters to you and the persons that matter to you. So What this will give you is answers to these 4 questions. Is which direction the trend is going, the current and larger degree. So not this trend, but also in the smaller trend, where are we going within that? How far is it going to be taking us? So here we have target areas. When is the market primed for reversal? We have a reversal here. And at what point is this assumption wrong? So market's moving, we have an invalidation level. So if you look at what we had here with Bitcoin, we had the long-term trend, shorter-term trend, where we're expecting the market to go. And once we got into that sort of area, we'd have given you some idea of possible reversal. But at what point is my assumption wrong? And with that, you can then use that to make a strategic decision. Make sense?
Yep.
So here we had the other one here, expecting the market to bottom out. But if it closed below this level here, well, then that would invalidate our view. So based on that, you could be buying here, but if we did see a move down here, well, let's get out of the investment until we see a deeper correction. So you can use those to make to put together a framework to make the right investment decision at the right time. And this can not only Scott, it's not just investing in those particular currencies or markets, but even just exchanging. If you're buying property, it's not just a case of just buying the dollars, but actually then using this information to actually time that exchange for that investment. So ask the question, and you see the power that this information can give you. It certainly made a difference for us, but I'm sure you can see what it can do for you. So what we're going to be getting today when you invest today is our medium-term long-term forecast on those 4 currencies, and the near-term forecast on the 4 currencies. So that's together those at $650 per month value on these 4 key markets. But it's not just that. Within our offering here, we have these extra tools here. So these are recent ones we put together. Email and SMS price alert. So we've developed this for you. We put your name, email, phone number, your currency that you're wanting to put in here. And that's not any currencies, but would be cryptos as well. And at what desired rate, price do you want a currency alert? Can you imagine what that can do for you? I know what it's done for us. You're just watching some key levels and just a few cents in terms of exchange rate can make a huge difference on when you exchange. So there's a bonus. And then here we've got a chart, live charts, which pop up on each of these forecasts, which you can change the time frame. You can add indicators. You can change the actual market itself. So you can see exactly how the market is playing out compared with the forecast, and therefore able to take advantage when the market drops into those target levels. And then in addition, we've got this chat box here where you can ask any questions. So if you've got any questions where the market is, like we've got here, do you think the current trend in Bitcoin, is the forecast still valid? What you'll have there is direct access to me and Alex for any questions at any point in time. So, where's this market going? Do you think it could go further? And we can give you our opinion at that point in time. Obviously, it's just our opinion, but it's more than just having the forecast itself. And then also we got contact us here. You can contact us by email, phone. We've got WhatsApp as well. So, whatever works for you, we're throwing that in today as well, as part of what our offering is. So the market price alerts, we get that for free. Email and SMS, $100 value. Live charts for free, $100 value, and then free direct access to me or Alex via the live chat, WhatsApp, email, or phone, $300 value, $500 per month total value. So what we're getting today is the forecasts themselves, and then those 3 extra things for free, which would be take us to a value of 1 to 50. Now, that 1 to 50 is not all that we're offering for, but I would like to say is that, if you look at what Bitcoin did, just getting it right within a month would have more than paid that 1 to 50. So, but what we're wanting to offer you is a couple of bonuses. Free 30-day access to our Rand forecast versus the dollar, euro, and pound. Some of you might know of our Rand forecasting service, but we want to give you 30-day full free access to our platinum level product, which is long-term right down to short-term, long-term to short-term on the euro and against the pound at $250 value. And then also to give you a tutorial, so to help you just to take this to the next level and add some extra tools and strategies in there for you, how to use our forecasting system for maximum advantage. And that's minimum $250 value. We are busy putting together a video tutorial on this, which would help you in actually just implementing this to the maximum extent. So if we take all those to add the 2 bonuses there, it's not just we start off with our global market forecast package, the medium and near term, the price alerts and live charts and free direct access to us and Alex and myself. And then the bonus, our Rand forecast service, plus our tutorial, that takes us to $1,750 value. And we had kind of stopped at this, and then Scott said yesterday what he wants to throw something else in here. So as an extra bonus, when you subscribe today, you're putting together a new inner circle. Scott, is that correct? Where we're restructuring this?
Yeah, so effectively doing it, but bring out, as you said, their version 2.
Okay, so it's going to take things to sort of new level for clients. I'm sure Scott can provide some details on that. So that's coming soon, and that's $500 value. So if we look at all that you're getting today, from our forecasts themselves, the long, medium, and long term to near term, price alerts, live chat, direct access to me, Rand forecasts against the dollar, euro, and pound, and then our tutorial and our video tutorials as well. And then extra bonus from Scott, $500 value, we get to a total value of 2,150 of what you'd be getting today. Now, obviously, we're not going to be charging you that figure today, but one question I would like to ask is, if all this, what it did for you was enable you to make some strategic decisions, like 2 or 3 decisions a year that could just change your life, like that Bitcoin one, you know, getting in at 3.8 or getting in at 7.6, and we're sitting here at around 50,000. You know, if all this did, if it just did that one thing for you, would it be worth the 2,150? I think you agree it would be, but other side is if it actually enabled you to stop looking around at everything else and getting confused and resulting in you sleepless nights and all the rest of it, maybe you know, medication and all that sort of thing. If we could just do that for you, would that 2,150 be worth it? I think, I know for myself, it would be, but of course we're not going to be doing that today. What I'm offering this year, and this is a really, really special price. I don't know if when we haven't put together a package like this for our clients ever, but we're offering that to you for just $29 a month or $290 per year. So you might say, well, you know, why such a small amount? Well, factually, from our side, we wanted to make it absolutely no-brainer for you. And obviously, we'd like to get a bunch of you guys in and then take our own platform to the next level. So we've got some exciting developments we're doing on that front to help clients even further time their decisions. But those should be rolling out in the next few months, and you'd be the first to hear about it. So for you want to get onto that, grab that today to get everything that you're getting. Just go here to online.wealthmigrate.com/DFS offer. And you can either grab out $29 per month or $290, so you're effectively getting 2 months for free there. From our side, I think, Scott, that's about it. You know, I think for clients, we want to make it just a simple decision to make. You know, what is this investment at $29 per month? What can it do for you? It's,
look, I've been a member of your currency stuff for I don't even know how many years, and I've been paying roughly 500 plus rand a month, which is before you moved to America. It was in rands. I'm glad to see you now in a real currency. But anyway, on a separate note, it's pretty much, you know, the same amount of money I've been paying for years. And you know, as I said, it's been invaluable for me to be able to see where things are going, what's happening, to get an input, to stop listening to the noise, and to ultimately be able to make better decisions. Now, what I think is also important in terms of what you're offering here, and really where you and Lee and the rest of the team are going, Alex, with the whole concept around the inner circle, is that the once-off information is valuable, but it doesn't actually get you very far versus being able to make ongoing, consistent decisions. You know, and I think that's the most important thing in terms of the way forward. So what we're trying to do here is, and again, this is just a step. You've already mentioned the inner circle 2.0. You know, the dream ultimately is to bring it down to the concept of smart investing, where based on every person's decision, you know, when they're making a decision, it's actually bringing this type of analysis in. And this is just sharpening the sword. This is just bringing it closer to the point where people don't have to go and find the facts all over the place, but can actually make intelligent decisions quickly. You know, so that's really, you know, the point. I think one of the things that yourself and Alex and Lee have done as well is by making it monthly and or annual. You know, it makes it really easy. As I said, I've got a full subscription where I can log in and go and look. However, I want to repeat, the part I miss is actually these webinars where I can interact with you. And I found it interesting tonight with the chat box as well, where you can, because I'm on all the different WhatsApp groups, and people are often like, do they think crypto is going up or do they think it's going down? You know, and it's quite often people are like, well, what does James say? And it's quite interesting because the charts can say one thing, but it's actually reading those charts and how they work and getting that.
Yes.
So, you know, again, the research is out there that if you try to do something on your own, you've got less than a 50% chance of success. If you do it with a partner, you've got about a 60% chance of success. Whereas if you do it in a mastermind type offering, you've got a higher than 70% chance of success. And I think that's the critical part here, is that you're not just making a financial decision, you're joining a group of people to ultimately do it on an ongoing basis. You know, Chad's made a comment here. Imagine coupling the right currency with the right cash box global return, double whammy. And I think that's exactly the point, you know, Chad, is that when you are investing and you're investing in different assets, different currencies, different countries, you know, currency is and particularly the forecast is absolutely important, you know, critical. And it allows you to make educated and informed decisions, which are far better than guesswork. And as Chad's rightly pointed out, if you get it right twice, you can really outperform the market, which I think is critically important. Can I ask you a couple of questions, James, in terms of what your thoughts are? People are putting in some comments here. Where do you see, you know, the dollar going and the pound, euro, and even, you know, cryptocurrency, etc.? What is your ideas around some of the near, medium, and long-term forecasts? And again, I get it; it's a high level. I mean, we've already been going 90 minutes, so I'm conscious of people's time. But for those that have that are here, you know, where do you see those markets going?
Well, if we go back to, or maybe what I can do is just pull up something here. Just you know, a high-level view that we are seeing.
We're not seeing anything.
No,
sorry.
you're not. I'll just. Sorry, I just want to put up a screen, yeah. So just from the dollar point of view, that you know, we have shared our, you know, this chart on the inner circle, that we have been looking for the dollar to weaken over the long term, down to here and possibly down to here, and that's what we've seen last year. Overall, we're expecting that the dollar to have some retracement. So if we look at this as a new trend, we're expecting the dollar to have some retracement up, and before then weakening again. So the split side of that, or the flip side of that, in terms of the euro, is also is the flip side of that to have for the euro itself to be rising for the next, I'm sorry, to be weakening for the next short while, the next couple of months, and then having a strengthening trend again. There's a chance for the dollar that we could rise into those, you know, a bit further, but it's not looking that way by any manner or means. But overall, the long-term trend is still down, and that will affect, you know, all other currencies, whether it is the rand or the pound or any of those. Obviously, that we all got cycles within. Each market has got its own cycles, but as I mentioned previously, the dollar is one of the big ones to watch.
Again, to repeat what you said earlier, if the dollar's weakening, then technically the others are all strengthening. That's what I heard you say earlier.
Correct. Yeah. And interesting with the rand is although we've seen the dollar weakening, the rand itself is it's kind of back to where it was last year. So we've actually, it's effectively the rand has weakened itself because the dollar has actually weakened more than the rand has. So it's an interesting concept. I don't know which other ones you're wanting to have a look at.
Well, I think I mean, in terms of someone was asking about Ethereum. I know you do Bitcoin, but what about the other cryptos? Do you actually do them at the moment, or Bitcoin specifically?
For ourselves, we've been doing, we looked at Ethereum and Ripple and some others. We haven't started forecasting on that, but this is one thing we're wanting to do in terms of rolling out the service is, the more, once we get to critical level in terms of those other markets, we'd like to expand the service. So it won't be just Bitcoin, but some of the other major ones as well. But one thing important with Bitcoin to understand is that, it's such a big player in the market that it does affect other cryptos. So we're expecting on Bitcoin itself for us to have we could be rising. We might test that 58 level again, but expecting a bit of a deeper correction, which will pull all other currencies down. Where in terms of our timing cycles, we're probably looking for a weakening cycle, overall weakening cycle through to perhaps April, May, before the next uptick takes place in those cryptos.
Doesn't matter. I remember when you did that presentation and you said that Bitcoin was going to get to kind of 43 and test and then go over 50 and then actually retrace back. And I seem to remember you saying it was going to retrace back as far as 3. Is that what you still are looking at?
Yes, let me just pull this up here.
Just by the way, Brad was saying with the graphs, if you can see here, what James is actually showing everyone is, this is actually live, it's dynamic. So like when I use my login, I can literally log in and these are all available, to be able to go and look at.
Yeah, so I think when we had our chat last year, this is probably what we are looking at, where we expect the market to push up to this 43 to 94 area, which is where we've effectively come into now. And so we could push a bit high in this area, but overall, we're still looking for a 5-wave move from here, counting it out before we have a big drop, which should take us then back to this level, down to 3, and then possibly even further than that.
So weird when Bitcoin's sitting at $50,000, 51 according to your chart up above there, and and you're saying it's going to hit $3,000. Like that stuff just blows my mind. I don't know, Lee, about you, but it's when I listen to these things that this is what really kind of shocks me. Both on the good side, because I remember when it was 7 or 8 and you said 43 and I was like, you're smoking your socks. And now you're telling me it's going back to 3 and I like, it just, and again, my point being is that for some people, yeah, they're crypto enthusiasts and for others, they're not, and they couldn't care less about crypto, but it's showing the power of these trends and knowing what to look for.
Yes, exactly.
So just to confirm then, what I've heard tonight, and I remembered from the last time. The dollar is looking to possibly increase in the short term against the euro, but over the next 3 to 4 years is looking to decrease in value in the region of 40 to 50% against the euro. With that, other currencies, with the dollar being the largest currency by volume out there, as the dollar decreases, other currencies are going to increase. So therefore, if you're fully and 100% exposed in dollars, you need, it is a concern, something you need to look at. And then the last thing I would say from the patterns perspective is that what I'm seeing from what you're saying is that with the dollar on a downward spiral, technically the dollar is going to go up and down in patterns, but it's on a downward spiral. And with that, the other currencies are going to be on an upward spiral. In the cryptocurrency space, it's the complete opposite. Bitcoin's actually on an upward spiral where you're still waiting for the 5 points before it goes on a long-term downward spiral trend.
Yeah, correct. So I mean, we're still expecting we could have it, some retracements down to these levels here. I just want to keep the link there in case persons need it.
And the question here, while the link's up, because we can just talk about it, Chad's asking, what is the outlook on gold? I'm not sure if you do gold, James, or what your thoughts are on gold?
Gold is one of our what we've been tracking. Let me just pull up a gold. Just make it.
James, you can take the full screen back. Again, I have popped the link into the chat box.
Oh, okay. All right, fine.
All our attendees can have the link to the offer.
Yeah, so our bigger picture on gold, is a more near-term picture. This is from 2 weeks ago. We're actually expecting the market. I could actually show you where we expect the market to top out. We expected the market to top out in this area here and then head down to 1670, 1570 area. And that is effectively what we have seen here. The market has broken lower. So we're expecting it to target down into this area with this kind of level being pivotal. Bigger picture, the market is either topped out here for now, or it has topped out here for now. But if we don't break below this 1451 area, we could well see a final spark up above the 2075. So if we're just looking over the next couple of months, Scott, expecting the dollar to strengthen, gold to weaken, but Bitcoin to possibly have a weakening trend also the next couple of months, but we could see some upside, a bit more upside there before we have a deeper correction. So it is a bit of a correlation, with gold itself weakening within the dollar strengthening cycle. But I think that could take us through to about May. But obviously it's not only the cycle itself, but the amplitude of these moves that would determine, whether this is merely a correction or whether it's a more of a long-term thing.
So there's a couple of questions, Lee, if you don't mind, that I'd like to just go through here, which I think are important. So Leon said, when I look at the forecasts on the inner circle, there's always, if this breaks, then that. So it's never a prediction. One of the things, Leon, that I like, you know, of what I've done with James is also something I learned from Clem Sunter, which is the probabilities. So, you know, when one looks at it, you've got a higher probability of X happening, you know, versus Y. James doesn't have a crystal ball any better than any weatherman does, but with a high degree of accuracy can show you forecasting from a patterns perspective. So what, you know, again, I'm not a day trader, so I don't tend to look at what's going to happen in the next month. You know, even if you take Bitcoin, I bought Bitcoin, and my average Bitcoin holdings are about $7,000. Okay, the highest I bought was $13,000. And I've been buying, you know, right from the beginning, but I was incrementally rising. Now, I must admit, when it dropped back to 3, 4, I was feeling a bit stupid, you know, and once it goes over 13, you feel very clever. But I'm not a trader of Bitcoin. I'm a holder. I'm an asset holder. And, you know, what really becomes important with these long-term predictions is where's it going to be in 2 to 5 years? That has a dramatic impact on your overall returns. I don't know, James, if you've got anything you want to add to that.
Yeah, I mean, the fact of the matter is there are times in the market where, so those cycles and the actual wave counts are very clear. You know, take a look at this here. There's no ambiguity. It's going down here, and that's only invalidated if we break above this level. There's no ifs, there's no buts. This is where our forecast is telling us where the market's going. But then you'll have others where there is that element, which I think we saw with you might have seen with the dollar here, that this is where we are expecting the market to head down, but this is alternate count here. If we break above these levels, where then this is where we're going. Now you might say that's not a forecast, but it's giving you what the probability, that the most probable outcome of where the markets are going. If it does happen, when will it break below here? Will confirm that, and then where it will go to, and at what level you're wrong. And if you are wrong, then what's going to happen? So you actually are still getting a framework of parameters in which you can make an intelligent investment decision instead of just thumb sucking. So yeah, even when you're having those alternate counts, it's still giving the structure in which to make an intelligent decision.
And I think on top of that, you know, this is never a destination, it's always a journey. So
yeah, exactly.
In exactly the same way as Clem Sunter says with his probability planning, he's got flags. And, you know, if X flag happens, then the scenario, a scenario's probability goes up. And if Y flag happens, the scenario probability goes down. No one has a 2020 vision on the future. So when one's doing scenario planning, when one's doing this type of predictive analysis, it can be 100%. If it was 100%, James would be a billionaire because he can bet anything and would never lose. But I think to Leon's perspective, it's a damn sight lot better than kind of using your gut feel, if that makes sense. I want to just run through here. We're looking at data from 1 to 2 years ago. Can current examples be more relevant? So again, what James is actually showing you here, when you log in, is live. I mean, you can actually see this is the 15th of February, which he's got on the screen there. So, you know, again, you've got short, medium, and long-term forecasts, and they only change the long-term forecasts when some of those probability factors happen, which is why the dates, and you can see, James, I don't know if you can use your mouse to point to it, the 15th of February, 2021, why the dates become so relevant, you know, as to where the different graphs are. Again, in the past, he was showing you stuff in the past, only because it's relevant to be able to see, you know, what is actually happening. I think we've answered the currency, Bitcoin and gold. Isn't Forex an hourly type of trade? So yes, like anything, you can trade it, in the nanosecond, and or you can be investing in a 5-year asset and trying to decide, should it be in America in US dollars or should it be in Europe in euro, and it also has an impact.
Yeah, so it's not hourly. I mean, we ourselves had we're sitting with some funds in dollars here when the dollar was sitting up at these sort of levels, and we said, well, if we're not going to need those funds for a while, let's rather put them into euro, which we did back in, I think, probably March last year, and then moved them back out of euro into dollars a month or so back. So that's it is about a 10-month trade.
Yep.
But just a purely holding. It was a forex trade, but more on an investment point of view than actual forex trading.
Question: Can your advice be used to short the market currency, James?
Yes. I mean, you could use the information to, as a framework to shorting a market. Sure, you could. Obviously, how we structured this is not for really short term, but more near term decision, investment and near term decisions instead of what is the market doing today. But definitely it can be used as a framework to go short or long.
Arthur said Bitcoin back to 3,000. So yes, that's what the long-term forecast said. Nikki said, when I look at your BTC graph, it's either an upward trend or a downward trend. It's not definite. So I think we just did discuss that based on different parameters.
Mm-hmm.
When will the ZAR go? We get Euro or China versus USD, but ZAR is much smaller. So what happens with ZAR? So basically the question is, what will happen, in your opinion, with the Rand against the euro, the dollar, the pound?
Over what sort of period of time you're talking about?
Yeah, well, again, I mean, I know that your graphs are near term, mid-term, and long term.
Yes.
So I suppose it's how long's a piece of string. But let's take it, because we are asset investors with I would hope at least a 2 to 5 year view. Let's take it with a long-term view.
Yeah, so long-term view, let me just pull up here. Obviously, get that long-term view with our just battling with one of my screens here. You get like one extra thing on the inner circle. We give our views on the dollar itself. I mean, on the dollar rand. Sorry, Scott, I'm just having some issues with one of my screens here and it's not showing up. But let me go in here. So, I mean, this is our dynamic outcomes is our rand forecasting service. We normally offer a free 14-day trial of that, but this is what you get for as one of the bonuses is 30 days free access of this. So let's just have a look here. What this. So we look at our medium-term outlook here. we're expecting the market to bottom out in this sort of level, the 1545 to 1445 level that was back in November, was that forecast, which we've actually seen a bounce out of there. And what we're looking at is this 1726 level has been pivotal. So expecting a move, the market to weaken, the rand to weaken the next couple of months or two. But with that level being then critical. If we break above that, we could then be heading higher for a final thrust higher. But if we don't, we could see a deeper retracement down here before. If you look at our long-term picture, we're expecting a move down here before pushing long-term trend much higher. So this would be the sort of level to be watching. But the next couple of months, with the dollar strengthening, we expect the rand to weaken, and that would be against the euro and the pound as well.
Yeah. Sure. Lots more questions coming in here. Thanks for the info, Scott and James. Would like to know if there are regular webinars like these held. Okay, so Tony, I think this is what we were talking about earlier. Is I think there'd be huge value in James doing this, and once people already understand how the engine works, let's say that was the first plus minus hour, where the next hour is where we would focus purely on the ups and downs. That would be part of this paid for service, so that people can really get that. So Tony, watch the space, and that's really what James was talking about with the $29 a month. James Ray Dalio speaks of the fourth turning, where we may see a new world currency. What are your thoughts on this, if you don't mind?
I certainly think that we could be seeing some changes in the next little while in that front. The whole fiat currency situation, where we got these banks just printing money out of nothing. It's just creating a huge debt bubble, which must get paid back at some point in time. So I do see that fiat currency, whole fiat currency concept being abolished. I don't know how or when, but definitely that is a scenario that is coming. And we could very well see some cryptocurrency, but possibly backed by precious metal, something like that. So it's quite an interesting thing to watch, but definitely we could be in for some big changes.
Yeah, no, I think it's amazing. And Tony said he's already paid for the year's subscription. Great value here. So
thanks, Tony.
That answers your question.
Welcome on board.
Lee, the Q&A. So I've been going through the chat box. So I just want to see in the Q&A if there's anyone I've missed. I am conscious of the fact that we've been talking nearly 2 hours. So is the US stock market going to crash next week? That's an interesting one. Could you look in your crystal ball and tell us? Yeah, I don't know if you've got an opinion on stocks and shares, but
let's just go. Yeah, one thing I didn't show was we've got live charts on this platform. Just on the click, not just with above the chart itself, but let's just have a look here. So S&P 500. Just trying to get my own charts here. Oops. Yeah, so what you can see, we've had this move up since the crash last year. I haven't taken a close look at this in the past month or two, but definitely we are looking just based on what our wave counts were, quite toppish on all the stock markets. So I'd be quite expectant of a considerable drop in markets within the next month. Whether it's just a correction of this move up, or whether we're going to see a really big market crash is the question. But I think you remember when we had our webinar last year, it's been about May or so, Scott. I mean, we're expecting the market to have either topped out here or having just a final fling higher, which could take it into this year. Maybe we'll push a little bit higher. I don't know. If we don't have a correction, but we're expecting a dramatic stock market collapse, definitely in the next year or so.
Okay. Nikki asked, due to me not being able to get on the webinar on time, will we be taught how to trade using the site? So Nikki, the recording will be available for you to be able to watch it so that you can understand it. If this is a formula, why does the system not apply the logic to any data, S&P? What do you and your team overlay besides just mathematics?
Or we are still developing just mathematics, but it's the modeling we're doing is to produce these charts is not just computer generated, but we use a combination of Elliott wave theory, or Elliott wave principles, which is kind of the laws that govern those human behavior. And it's not just a straight up down pattern. There's like 13 different patterns that could be developing within that whole structure. And that together then with price relationships between waves, working out where those waves are likely to go, is effectively using different price relationships from all these waves together to get an area where it's almost like the market is drawn to that point in terms of its cycle. And then we use time cycles as well. It showed you that the cycles is actually using those as to what are the major time cycles that are in that market. And then with momentum studies as well. And what we do is that you take all that information and then distill it down to a long, medium, or near-term outlook. So it's I wish we actually had you could just plug a chart in and it spit all the numbers out, but at present it's not quite that. It's a mixture of science and art. So
awesome. Listen, a couple more things. Emma said the paid for service sounds awesome. How long will the 29 offer be available? Obviously that Lee and James and Alex have put this together, especially for our inner circle group. So I don't actually know the answer to that, Lee and James, but I know that it's something that you guys have offered primarily to our community.
I must just chat with Alex that we discussed. I think we had it going through to Friday. Is that correct?
Yes, that is correct. So we will be sending out the recording and the link to our community again tomorrow, and this offer will be available until Friday.
Okay. But you know, if you are going to subscribe, just don't leave it till Friday. I know for myself, when you've made a decision, yes, this is what I need, and Friday comes and something else happens, and then it's Monday, and then it's too late. So
Last question.
Q&A box. Sorry, Scott. I just wanted to attack this question because I see it's up 3 times. I don't know if it's the same person or 3 different people that have just asked. They are already subscribed, but they want to upgrade to the offer that we've just put in front of them this evening. I am assuming that they can contact you directly, James.
yes, just send us an email. Yeah.
So those 3, they all came through as anonymous attendees, so I don't know who to direct that answer to, but you can just reach out to James and Alex directly and they'll be able to assist. Or reach out to me and I'm happy to put you in contact.
Cool. And then just last question, and I'm sorry, but I actually have to jump to another meeting, believe it or not, but I thought 2 hours would be plenty of time, but the question here from Chad saying, do you think the correction will be as low as the March 20 levels? So March last year with coronavirus and whatever. I presume we're talking about the FTSE 500 when you were looking at those graphs and the correction on the stock market.
Yeah, I think what will determine that is the strength and structure of that initial move down. But you know, when we do have the market topping out, from that point of time, we'll be able to determine whether, as that pattern plays out, whether it's just going to be a correction or whether it's going to be, you know, a move right down to those levels again.
Excellent. Well, Lee, I think we could stay here all night answering the Q&A. I'm really excited with what James and Alex have brought in with the chat functionality as well. I think that's very, very powerful within the community. So where, like Adele's saying, can we see the short-term view on BDC? You know, I think the point being is that all these different currencies and, you know, be they fiat or crypto, all moving in different directions. And really what we're inviting people to do is, rather than show you the photograph, we're inviting you to join us on the movie because it's an ongoing pattern and ongoing pattern recognition. But I think, Lee, from my side, certainly, you know, I just want to thank James and Alex for everything. You know, certainly over the last 12 years, I can't really say much more other than the fact that I'm voting with my feet. I'm still here. I'm still using the system, and we are promoting it, not because we get, you know, we're not going to retire over whether we help people, you know, work with James and Alex. What we feel very strongly is that if people are going to, you know, use smart investing, they have to have the right tools to be able to do that. And this is why we endorse this product so much.
Well, thank you for that, Scott. I just wanted to add, you know, if anyone's a bit unsure, you know, whether it's going to do what it says it's going to do, we do have a 60-day money-back guarantee. So, you know, try it out for 2 months. If it's not what you expect, anytime, for any reason, just let us know and we'll refund you in full. So we want to make this completely risk-free. When you invest today, you get not all those bonuses and everything, but you know, if it doesn't work for you, you've got 60 days to try it out in full.
Well, thank you very much, James. We really do appreciate your time and generosity that you have given to our community tonight. The link has been posted in the chat again and is on screen at the moment. But thank you for spending the last 2 hours with ourselves and with the community. We really do appreciate your time.
It's my pleasure, Lee. Only too happy to just share some of what I've learned, my over the course of the last 15 years plus. So if I can help anyone out there in making their decisions, make them better decisions and reduce stress levels in doing it, that's what we're here for.
You know what's interesting, James, is that a bunch of people in our community are coming through. WealthE, it works, I use it, I like it. Chad, powerful tool, must do. Ingrid, look forward to listening to recording. You know, it's just, it's so many of us that have been around for many, many years watching you. In the beginning, you know, the analogy I would use in the beginning is that there's doubt. And then after watching it come right so many times, you eventually, you don't even have doubt. You don't even wonder why or how it's happening. You just listen. Anyway.
And it's not a perfect science, but it's the only thing we know out there that's worked for us for so many years, and that's why we're still using it ourselves.
Yeah. Excellent. But Lee, back to you.
Yeah, thank you very much, Scott. Thanks for joining us tonight. As always, we really do appreciate it. And to our community, those who have stuck with us for the last 2 hours and shared in James' knowledge, we really do value your time and for you choosing to spend this time with us. As I said, we will be posting the link in our various groups and sending it out to everybody tomorrow, along with the recording. So please do share it with those that you feel could benefit. And as always, we hope that you are surrounded by love, health, and happiness. Take care, everybody. Until our next webinar, it has been awesome spending this evening with you. Be blessed. Goodbye, everybody.
Yep. Thank you. Thank you all.
Good times.